20. 1,720 is a bid.
30.
30. 1730. He bids again. 40.
50.
50. He bids again.
50.
Are you up to it? 80. This man means business. 90.
90 here.
1.8. Going.
Hello,
Going.
and welcome to the First Brick Property Podcast, episode 3. My name is KM. I'm the director of First Brick Property Buyers Agency. The purpose of the podcast is to bring a casual style show to discuss all things property, with education being the key. Our episodes will range from discussing a variety of topics to having special guests who can share insights into the property world. Whether you are a beginner or a seasoned property investor, we believe this show will be able to further your knowledge and really remove any barriers to getting involved in the exciting and fun world of property. Today, I have a very special guest with me to discuss some very important topics. Now, this guest is very special for a few reasons, and let me see if I can do him justice. Firstly, this is the first ever guest on the First Brick Property Podcast. He is the director of Power Loans. Before that, he was a mortgage broker for Aussie. Then he was a senior mortgage broker at another company before starting his own company a few years back. Power Loans specializes in providing superior financial advice so you can acquire property, whether residential or commercial. Few home loan brokers can match their exponential product knowledge, consistent performance, and the friendly service they provide. That's why they are the known experts in their field, who have earned a firm reputation for finding the best loan to suit the individual needs of their customers who depend on them. Power Loan professional brokers continuously research trends within the banking and lending industry to discover the most competitive products, interest rates, and loan options to supersede customer expectations and make their dreams a reality. Power Loans was established to provide outstanding service in assisting clients to find the perfect loan to suit their individual needs. They are committed to sourcing the best products and interest rates available on the market at any given time. Their speed and level of service is second to none, and Power Loans maintains industry standard accreditation to assure their clients of their commitment and professionalism. Power Loans was nominated for an MFAA award at the end of last year. The man is also an inspiration to fitness goers, and finally, a personal friend of mine. This man is none other than Fadi, also known as Fershi. Fadi, how are you, my friend? I think I did a good job there plugging your business, huh?
I'm good, man. But like I said, I think you oversold me.
Yeah. And you're definitely good at what you do, and everyone that's gone to you has had a good experience. So I don't think we've oversold you at all.
That's good to hear.
Yeah, well, I hope so, because if any of these listeners end up going to you and you don't do a good service,
they're coming back to you.
We're gonna have to hunt you down. Before we get into the podcast, just a quick note: this is actually our second attempt at recording this episode.
Yeah.
The first one, for some reason, didn't pick up Ferdy's voice at all. I don't know if it's because my voice is much nicer on the microphone or you're just very softly spoken, but we've fixed the problem, and so we'll give it a second go. We'll get into it now. So today what we're going to do is we're going to talk about all things financing, loans, deposits, equity, LMI, since we have you on board and you're the expert in all things in financing. So that's what I was thinking we should do. But what do you think?
Sounds good to me.
Beautiful. So, Fadi, the purpose of the podcast, I guess, is to teach and educate the listeners about, all things property. Finance is one of those things, and probably one of the most important things. And the process of getting loans and how everything in the finance area works. It's quite important, and a lot of people don't know how it works. So I thought we'd talk about this today, and that's why we have you on. Do you want to let everyone know, or the listeners, I know I could have already spoken about it, but do you want to let everyone know what you do at Power Loans and how you help people in their property journey?
Oh, definitely. So what we do, we try and get in contact with customers. The customers get in contact with us, whether they're looking to purchase their first property, looking to purchase their second property, etc., investment properties, commercial, car loans, equipment finance, developing. We get all sorts of customers that come to us. The special thing about what we do, especially, is when we deal with first home buyers, people that are not too sure if they're in a position to purchase a property or refinance their property or be in a position to do anything but it's interesting when people come see us. We actually have a little bit of a giggle because people find themselves in much better position that they think they are, and we try to help them, get to their goals, and at the same time trying to save them some money so they can still enjoy their lives.
Yeah.
So we're all about doing what's best for our customers, getting what's the best product, best rate, whatever best suits them, and we look at the next 5-year plan. We're not here just for the short term. We're here for the next 30 years of your life.
Yeah.
With the home loan, and hopefully, if we become friends, longer than that.
Yeah, that's it. So essentially, you're the guide from when they want to start looking at financing options, and you do all the work for them, and you educate them and show them the way, I guess.
Yeah.
From start to end.
Yep, definitely.
Beautiful.
We try to. Yeah.
Cool. So we'll get into the episode in a bit of detail, and we'll go over some topics. Just before, I thought it'd be a bit fun to do some quick fire, get to know you kind of questions, so the listeners can know you the way I know you.
Yep.
I might learn a thing or two about you as well right now. So you cool with that?
Yeah, of course.
Beautiful. So I'll just shoot some quick questions at you, quick answers. Number one, what's your go-to order at your favorite restaurant?
The rainbow trout fish. Rainbow trout fish.
Rainbow trait?
Yeah,
Rainbow
trout.
Rainbow trout fish. You love your seafood.
I love
you
my
just
seafood.
telling me about your prawn
dumplings. Yeah. Or just have a massive seafood platter.
Yeah.
Yeah, bring out everything.
Awesome. Anything seafood. If you get if anyone here is gonna go use Fadi as a broker, just bring him some tuna or something.
Tuna or fish or lobster.
Oh, lobster. Yeah. Bring me some lobster too. Second question: what do you wish you had known when you had started out in your career?
In my finance career, or
just I guess when you started out your professional career.
I wish I looked into it a little bit more.
Yeah.
I did accounting in uni, so that was an accountant by trade for about 7 to 8 years.
Yeah.
Obviously didn't end up liking it. I kind of wish I had that bit of what they call a gap year after school, where I kind of not so much find myself, but look at different avenues to see what I'm really interested in.
Yeah.
But the way that things have turned out, I couldn't be happier.
That's it.
That's it.
Do what you love now. And
Exactly.
Beautiful. Third one, what are you curious about right now?
Right now, I'm curious about how the market's going to shift. There's so much talk going around. Everyone has their opinions. My opinion at the moment is that we're going to see rates stay steady for a little bit longer. But hey, I couldn't tell you how the market's going to change. If it's going to go up, people are saying it's going up. People are saying it's going down. People are saying it's steady. So it's pretty interesting. I'm kind of excited to see.
That's it. It is a very interesting world. I mean, at First Brick Property Buyers Agency, that's what we do. We try and do forecasting, and we use a lot of data to try and see where the best areas to buy in. But even that, and even doing that, no one in the world has a crystal ball
Exactly.
that we can look into. And,
Number 8 ball, yeah.
That's it. No one has the number 8 ball, so it is definitely something that I guess we'll always be curious about. We'll never really know what's going to happen tomorrow.
Yeah, and I think it's important that you touch that people that come to you, you get them you generate these reports and go into detail in regards to what they're looking for, and it's something that customers out there are not aware of as well. So when customers come to me, they're looking for investment property, they're just looking at ways to benefit their tax or ways of using their money correctly, but they don't really look into the bigger picture, where I guess with my customers at the moment, speaking to them in regards to what you do and the generating the reports of the area, the history, future development, that's something that I encourage a lot of people to start looking into.
For sure. Well, thank you.
No worries.
Last question. What is something you've failed at?
How long's the podcast?
We'll have to 1.5 times this part.
Yeah, 1.8.
If you're listening, because there's a lot of failures here, I'm guessing.
I guess the one thing I've failed is, believing myself a little bit more, taking more chances. I don't know. I've got a list. I can just name them real fast if you want.
That's all right. We'll leave it at that. We won't embarrass you too much on the pod. I guess we'll get into it. Now. So I kind of already asked you what your role is. But can you perhaps tell the listeners, why would someone use a broker as opposed to trying to obtain finance themselves? So, why should I come to you as opposed to just walking into one of the big 4 banks and asking them for a loan?
Yeah, that's actually a great question. It's one of the first questions people ask. The beauty about using a broker, and I'm not just saying this because I'm a broker.
Yeah.
See any other broker. The beauty of having a broker is basically if you were to walk into one branch today and they offer you one product, or they've got a few products, each branch has their sort of products that can fit your needs, but they're not going to tell you there's a better deal down the road. You may want to be borrowing a little bit more, but they're telling you, nah, you can only borrow this amount. Your capacity is up to this amount. They're not going to tell you if the branch down the road or a different lender is going to give you a better option, a little bit more money. You might be looking for something a little bit more bigger, looking for a product that, maybe a fixed, split with a variable, with an offset. These are things that if you go to a broker, we've got over 35 lenders in our panel, over 1,000 products and features. And if one product is not going to work for a customer, we're not going to end there. We're going to find that customer a product they can apply for. And if they can't at the time, we're going to work with them month by month to try and get them to their goal.
Yeah. So safe to say that if I walked into a bank, asked for a loan, I mean, the bank's only obviously going to show me what their options are.
Correct, yeah.
They're obviously not going to show me someone else's options and
why would
compare. Of course not. But also, a lot of people don't know about second-tier lenders, which you look at.
Yeah, we love our second and third-tier lenders because for example, with the features and the products, like most lenders in the market at the moment in regards to rental income are shooting their rental income at 75 to 80%, where there's other lenders in the market that are, they're looking at 100% rental. They may not take negative gearing into account, but that sometimes helps the deal get over the line for these customers. So I guess you can say every lender out there has tighter policies. Like you'll hear that from a broker, especially in today's market, but where self-employed customers come into play, looking at their income is a little bit more difficult than just looking into a PAYG income. And these sort of lenders can actually help them move into their home or, buy a business. It's a beautiful thing. And, we as brokers, we rely on these sort of lenders as well to help us out.
Just very quickly, can you really quickly explain to the listeners, maybe they've never heard what a second or third tier lender is?
Yep. So second and third tier lender, for example, you're looking at the Maybank, the INGs, the Pepper.
Essentially your smaller banks.
Your smaller banks,
smaller
AMP.
lenders.
And they do have, in most cases, more of a lenient servicing calculator. So a lot of the customers that come to see us, these customers just, what are we known to? We're known to the CBAs, we're known to the Westpac, St. George, the ANZ. So they usually walk into those branches that, they come out, most scenarios, they come out satisfied, they found the product they need, but some people, they wanted a little bit more. They wanted to purchase a house for a little bit more.
Yeah.
And that's when they come to us and we start going for these servicing calculators where it's more of an assessment rate.
Yeah.
And just to explain what the assessment rate is to the listeners is that back in 2009, when the global financial crisis kind of hit us, is that the banks were lending out a lot of money for customers that can afford it at the time, but they never really took into account if the interest rates were to go up, are they going to be able to keep up with their payments, their living expenses, their bills, etc. So now the lenders have actually come through and put an assessment rate in there where the banks say, we know you can pay it at the 2.99%, we're currently offering you now, but we want to know if you can pay it at the, for example, 5.5%. You've got the INGs who are a very clean lender. One of my favorite lenders to use, they have their assessment rates at 8%. They want to make sure that their customers are able to service later on. And you know what? It kind of does protect the customer. It gives them that buffer if times were to get to that stage. At least they know they can, keep off their repayments and their bills.
Yeah.
Yeah.
I think it's important to know that, when we're going to get a loan, the banks obviously, the banks survive off people getting loans. And,
Correct.
So the banks want to fight for our money. And if I was to go into a bank by myself, it's very one-sided. Whereas if I was to use a broker, they can see, they can, take invites, they can
exactly.
woo the other banks into using me as their client.
Yeah.
So that's a good reason to.
And another beautiful thing that we've got as well is that I love educating the customers that come to us, because you find a lot of customers go, mate, Fadi, we don't know what we're doing. We're living in your hands, but they feel a lot more comfortable when they know what they're about to do. Like, this is a big investment for anyone that comes through. So for me to educate a customer, I need to do that. It's a duty of care for them to understand what they're about to sign on. So that's another thing that, we offer, and a lot of brokers offer that too. And that's why I encourage, obviously I'd love for everyone to come to me, but go see a broker when it comes to look at your finance.
Definitely. Yeah. And I guess that's our motto as well. With our first brick, we love to educate. That's why we have the podcast, and that's why you're our first guest on the podcast. And just probably the other point I would say is why use a broker is time. I can't imagine how long it would take for me to go into, the 4 banks, let alone second-tier lenders, and go ask each and every single one of them for a loan and discuss the options. And if you use a broker, they do it all for you. They're going to ask you for some documents. It might take you a little bit of time to get the documents, but then it's in their hands. They do all the work. So definitely a no-brainer, I would say, to use a broker. For sure, over going into a bank. There's we'll put in the show notes. There's a link on our Facebook page. An image on our Facebook page that kind of just shows a real easy separation. The difference between going to a broker and going to the bank. Really hone down the difference there.
Here's a question for you. So in regards to that scenario, do you find self-employed people having more issues with finding finance?
Definitely.
Yeah.
Definitely, we find, obviously, with self-employed, if you're not sure, if you're listening to this and you're not sure, self-employed people have a different kind of criteria with the banks when they're looking at financing. And if you're self-employed and you go to the bank yourself, sometimes it's a flat out no, can't get a loan, or your options are really limited. Whereas with the broker, because they have so many different packages and options, and with so many different banks and lenders, they can really work hard, and they can really work the banks and the lenders to get you a better option. So I definitely find for self-employed people, it's 100% go to a broker, because they're going to have so many more options available, and they know how to work the system and talk to the banks and, and sort your situation out for sure.
Definitely.
For sure.
And that's what I loved when the commission came out in regards to, going a bit against brokers, or a lot against brokers.
Well, the whole industry
turned against us. And I was confident because when those commercials started coming on, TV, in regards to support to brokers, perfect example they used, and, the MFAA, the FBAA supported us, our aggregators support us. A plumber, for example, goes into CBA or into Westpac, and, a lot of self-employed people don't have a lot of their paperwork together. We're usually working with them to try and get everything together. But there's certain lenders that won't allow self-employed to borrow as much as they could or they can show. And that's why for self-employed people, it's important for them especially to go see a broker.
Yeah, for sure.
Yeah, definitely.
Sure. So that was good. We spent a bit of time on that. So I think we covered it well. I wasn't prepared to actually answer a question on the host, so know your place, Fadi. So we'll move on. I guess we'll keep going in a linear line here. So we discussed why you would use a broker. What can you explain what the actual process involved in obtaining a loan is? What are the steps that I just come to you and ask for, $50 million and so I can go buy a mansion and stuff? Is that how it works?
That's like the first question I get asked every time I go see a client. I guess the process is, once a client gets in contact with us or we get in contact with a client, we actually sit down and part of our compliance, we go through who we are, who we aggregate through, which lenders we actually use. That's something that we have to provide to all clients. And then from there on in, we look at what are they looking to do? Are they looking to purchase? Are they looking to refinance? Are they looking to purchase an investment property? It might be a business loan, commercial loan. We sit them down, go through all the information. We like to look at their funding position. Their funding position, basically, for example, for a new purchase, it let us know what deposit we can look at, lender's mortgage insurance, if there's anything that's involved, going off what their savings are or what their equity they're going to use, whatever their deposits they're going to be using, we work around that in regards to the funding position. And then we look at their servicing, obviously. And then from there on in, the fun part starts. Yeah. I say the fun part because I enjoy is we start going through lenders, showing them rates, products. A lot of customers coming to us like we need an offset account, we need a line of credit, we need an overdraft. So it's interesting because there's so many lenders out there that we go through and we start shopping with the customers. And one thing that we pride ourselves on doing is that they see what we're saying. We put it all on the screen for our customers so they see what we're saying.
Yeah. I think something you just mentioned there that's really important is you were saying, the different packages that are available, whether they want offset accounts or, or all the other things that can come with a loan. And a lot of people get fixated on the interest rate.
Yeah.
And I think especially with an investment loan, investment property loan, sometimes the interest rate is not the most important thing.
Yeah.
With the loan, often it's not the most important thing. Borrowing capacity. If one lender is able to get you a lot more money for a slightly higher percentage, or you can get an offset account with one for a little bit more, or as opposed to a lender that won't give it to you.
Yeah.
Just something on the side note, just to know that interest rates are not the be all and end all, and definitely not the most important. They are important, factor definitely, but not the most important.
It's very important, and it basically comes down to what the customer's needs are.
Yeah.
So the customer really usually comes in and they, most of the time they don't have a plan. They just want to see what's the best case scenario for them, and we put those scenarios for them. And then there has been scenarios where a lot in non-conforming lending where customers are just got a lot of outstanding debt and they want to consolidate their debt with them, but it's at a higher rate, but it's actually saving them money on a monthly basis.
Yeah, correct.
So we get customers coming in where their monthly expenses going to all their outstanding debt, maybe 5,500, just hypothetically saying, but they may be going a higher rate, reducing all the rates from all their outstanding debt into one loan. And they might be paying a higher rate of maybe 4.99 to 5.99 of non-conforming lending. Just it's hypothetical numbers out there, but they're saving themselves $650 a month.
Yeah, correct.
So it depends on what the customer's needs are.
That's right. Depends on the needs. I just thought, as you were speaking, just kind of popped up that I would guess that a lot of the, one of the first questions you get is, what's the rate?
Yeah,
how much is the rate? Can you give it the lowest rate? But sometimes, like if one lender might give you an extra $100,000 borrowing power, and you can purchase a better property or a better area, which might grow at 2 or 3% more annually, and you're going to pay an extra % of interest, which is a lot.
Yeah,
it's going to be better.
It's a lot now.
Yeah, it's a lot now. That's it. So
it's all about the long term.
That's it, long term. So just want to throw that in there. Let's talk about deposits. So you mentioned the process of how we actually get the loan, and what you do, and looking at all the packages. When it comes to deposits, how much money do I usually need to save to get a loan? Is it do I need to have like half the amount of the property purchase, or
no?
Because that
it's already hard for Sydney buyers to get into the market now, and now we're going to give them 50% deposit.
50% deposit. Is there like a minimum kind of? Is it like 20%? Is the standard rule?
There's so many lenders out there where customers with a 5% deposit can actually purchase their home, and it starts from 5% to put down, and it shows genuine savings. In scenarios where you don't have genuine savings, you've been renting for more than a year, the bank looks at that as genuine savings because they've actually been putting money aside, they've been paying money to rent. In regards to deposits, you mentioned the 20%, so the 20% deposit plus the stamp duty, or if you're a first-time buyer, no stamp duty, you avoid all sorts of lender's mortgage insurance, LMI, they call it in the industry. And for customers that that don't know what lender's mortgage insurance is, it's basically money you have to pay to get into the home, basically, that it insures the banks. Sounds silly, but that's where it is. And
so you're insuring the bank because you're borrowing more money, essentially.
You're borrowing close to 100% of the property that you're purchasing.
So you got to insure the bank.
Yeah.
Just in case you default.
Exactly. Yeah.
So you're not insuring yourself.
Not insuring yourself, no. You're insuring the bank. And that's another thing that came through after 2009, after the global financial crisis. They brought that sort of rule through later on. Any deposit's a good deposit. Even if it's not a deposit to put in a home today, any deposit's a good deposit. We'll get there. We mentioned lender's mortgage insurance. That's going to happen. Anything under 20% deposit, you're going to have to pay lender's mortgage insurance. And lender's mortgage insurance, in 99% scenarios that I've been dealing with, is usually capitalized on top of the loan. So it's not something that you guys have to pay for or fork up front. It's something that's capitalized on top of the loan. It's added to the loan.
Okay. So just to real quickly summarize that, in terms of deposits, 20% deposit, and you don't pay lender's mortgage insurance.
No.
Anything less than 20%, you can still get a loan, but you'll then activate it and start paying lender's mortgage insurance.
Only, of course, in the medical field, if you're a doctor, pharmacist, optom, dentist, they pay no LMI up to 90%. LVR, which is the loan to value ratio.
Yeah.
So what that is how much you basically borrow to how much your property is worth.
Okay, so if I'm in the medical field, I only need a 10% deposit and I won't pay LMI.
No.
Wonderful. That's cool.
Yeah.
Just on LMI, my belief around LMI, I don't know if you agree, but my belief around LMI is, avoid it if you can.
Yeah.
Embrace it if you have to. And what that kind of means is, if it means you can enter the market earlier and you're going to pay some LMI over the 30-year life term of the loan, and it's the market is moving quicker than you can save, I would say it is a good time or a good opportunity to look at using LMI to get in the market. However, if the market is slowly moving and you can save quicker than the market is moving, then I would say avoid it and hold on and probably save a bit more money. Would you agree with that?
Yeah, definitely. One point that you made is it gets them in their home. So if they're in a position where they're looking to purchase, they just want to enter the market, they believe that they've got a deposit, but they're finding the market's moving faster than their savings are, then that's an option for them. But I'm of the belief of trying to not pay any more fees.
Yeah, of course.
So we're always trying to minimize the fees. So if you're in a scenario where you can put that 20% deposit down, and it puts you in a better position as well. It goes back to the LVR, the loan to value ratio, is that you're only borrowing 80% of what the house is worth. And it gives you that option of, paying it down. And that's when we start going into principal and interest on your repayments. But when you're purchasing a house at 95%, it gets into the market, you've capitalized the loan, but you're hoping that the market stays steady. Hopefully it goes up. Obviously, that's number one hope.
Yeah, that's right.
But it's a lot more safer as well.
Yeah.
Yeah.
Okay. Cool. Obviously, regarding this, speak to your broker and accountant. This is all just general advice, just a bit of a chat. Don't take this as gospel and come after us later.
We start getting sued.
But we'll edit that part out. No, we'll be all right. So I guess my next question would be, so we've just spoken about these deposits, 20%, or say I'm a doctor, so I only need 10%. Every time I need to buy a house, I need to save 10%. Is that how it works?
No. Well, let's say you purchase your first property.
Yeah.
And this is a lot of our customers. We're seeing this a lot these days, that they're using their equity out of their current properties. And what I mean by equity is money that they've paid down in their property, or the property's actually gone in the market, and they can use those funds to purchase another property. So that's probably one of the best ways to save. I say that's why I always push for that principal and interest repayment.
Yeah.
To grow equity in your property, you're paying your home loan down, reducing your debt, and in the future later on, you're able to purchase another property using your current property, which is a beautiful thing as well.
Yeah. Can you equity is massive, is very important in the property journey.
Absolutely.
Can you explain how equity is calculated?
Yeah. So for example, let's say you came to me 2 years ago and you purchased a property for $650 and the loan is for $500,000.
Yeah.
2 years down the track, that property is now $950 and you've got only $400,000 left because you're a rich man. You've paid $50,000 a year in repayments. So now currently you owe $400,000. The property is worth $850. So what you do? $950. Sorry, the property is worth now $950.
Yeah.
What we'd say is $400,000 divided by the $950,000 that your property is now worth in the market times 100. Now your LVR is at 42%.
Yeah.
All right.
What does that mean? 40%?
That basically means you only owe 40% of what the property is worth now.
Okay. Yeah.
Now, in most scenarios, and we encourage this to customers, we like to go up to the 80% LVR because we don't want them paying LMI or lender's mortgage insurance to purchase another home. If there's a need to pay lender's mortgage insurance to purchase another property, like we were talking previously, that may be worth it for them at the time. So if we just calculate 80% times 950,000,
which is the current value of the property,
that's at 760, and now you currently owe 400,000.
Yeah.
You've got $360,000 of equity to use to purchase another property, to purchase a business, or not so much purchase a business because they don't like to tie residential business. But if you're looking for that investment property, or if you're looking for an upgrade of your home and turn your current property into a rental property, you've now got 360,000
So I can use this $360,000 equity as a deposit
and for stamp duty as well.
and stamp duty and all my other costs.
Yeah,
Okay, so I guess that's how people get ahead and buy their second, third, fourth, and fifth
absolutely.
property. Can I use that $360,000 as two separate deposits and buy two properties?
Yes, if you're in that position, you can service
Yeah.
those two loans. Absolutely.
Yeah.
Well, $360,000. That's
It's massive.
massive. It's more than 20% on a $1 million home.
Correct. Yeah,
Exactly.
yeah.
So if you're looking for two investment properties,
Yeah, definitely.
you've got two deposits there.
I think it's important with equity to note that you might have the equity available, but if you can't service it, and when we say services, we mean like you can't make the payments on the mortgage. It's not just
The income's not enough at the
That's
moment.
right. Yeah. If your income's not enough to cover the extra loan, the bank won't just give you the equity because it's available.
Yeah.
So, but that's a really important point, and probably one of the most important things with property or building your portfolio
Absolutely,
is you know, releasing equity and having equity available to move on and buy the next one and the one after.
And don't forget, you're just adding to your income for the rental income that's coming through.
Yeah.
So people that believe, oh, we're not in a position to service an investment loan, they don't take into, well, they do take into factor, but like rental income comes in and increases your income where you're able to service. Let's say in that scenario, you can say you can purchase two investment properties. They'll be able to service those properties if they've got the income there as well.
Yeah.
So it's a beautiful thing, and you're right. It's definitely how people grow their portfolio.
Yeah.
Yeah.
Just on the equity, stick on it for a second. So in that example, we had 360,000 available equity.
Yep.
Does that mean the bank's just going to give me $360,000? As
Cash.
a bit of good, cash,
Cash.
goodwill, or like,
So in most scenarios at the moment, so you've got a few lenders. Like we said, we discussed all sorts of different lenders in our panel. Some lenders will give you that cash, if they know if it's for a future investment opportunity, you're looking to purchase a home, they can put that cash into an offset account that you may have or give you that cash to purchase your next property. In some scenarios, some lenders want to know exactly where those funds are going. So in some scenarios, they're actually looking for an investment property, and they would ask us to prepare a pre-approval where if it's with them or for another bank. But in most scenarios, if you're borrowing equity from one property, you'd like to try and stick to the same bank, because now those two houses start getting cross-collateralized.
yeah.
Yeah. So in only, I guess, so much guarantor loans, I guess something that we missed previously in regards to deposits is that guarantor loans are probably the only ones where I can see where one security is with one bank, the other security is with the other bank. For example, the parent's home is with CBA and the kid's property is with Westpac, for example. But in this scenario, using equity out of one home to purchase another property, so much saying you'll purchase another property at 100% lending, that's when they start getting cross-collateralized, yeah.
Okay. Just before we move on, I guess part of that question was what I was trying to get at was the bank is not just going to give me 360,000 without me having to pay it back.
Yeah,
The equity goes on to an existing
Gets
loan
added
or
to your
becomes a
loan.
new loan.
Absolutely, yeah.
You do. I just make that point clear. Equity. Equity. You still have to pay it back.
Yeah.
It's not. They don't just give you the money.
Yeah,
and
yeah.
say here's another house. Thanks for picking a house that went up in value.
Yeah.
No, you definitely have to pay that back.
And that's actually an interesting point, because you can either leave that on your existing property, or in most scenarios, people believe that they can just borrow 100% of their investment property for more tax purposes, that more negative gearing here.
Yeah.
But then again, that's, like as we discussed before, that's a conversation you have with your accountant to see what's going to benefit you the most.
Yeah.
But ideally, you can spread the loan over the two properties any way you please.
Yeah. Cool.
Yeah.
Before we move on to the next point, since we've been talking about equity, LMI, deposits, all these numbers, there's a really awesome application that you can download on both Samsung or any Android device, Apple. It's available. It's called the Property Calculator Australia app. I'm not sure if you've heard of it. I use it every day. It's pretty much just a really simple calculator that you can throw in some numbers, where you're looking to buy, how much the property is going to be worth, how much money you got available. You can change the interest rate and how long the loan's going to be. And essentially what it does is it calculates all your repayments, tells you how much the deposit's going to be, what the stamp duty is going to be. Just a real easy app to use for free.
Yeah.
Yeah, have you come across it before?
It's actually my go-to app when I'm on the road where I have
Okay.
access to my laptop.
Yeah.
Customers look, oh, how much stamp duty I'm going to pay? I'm like, sure, I'll find that out for you. And it's as quick as just getting on their app and going through it in regards to deposits, areas, postcodes, etc. It's actually a great app in repayments as well, being a broker.
Yeah.
People always are, all right, so how much would I have to pay every month if I'm on this run? I'm like, oh, perfect.
Just
Because I don't have the
quick-
system in front of me.
numbers. Yeah,
Quick
yeah.
numbers, go straight into the app. It's so easy to use. And they're always upgrading. So yeah.
So we'll put a link to the we'll put a link in the show notes to the app if you'd like to download it. It's really awesome, free app. You mentioned cross collateralization.
Yeah.
Do you want to just explain what that is? This is probably a really big topic, and we'll save it for another episode. But just because you've touched on it, we don't want people to be a little bit lost.
Yeah.
Can you just really briefly explain what actually is cross collateralization?
I know it all too well.
Yeah.
Because
You'd see some horror stories, I guess.
horror stories, and you learn new things every day.
Yeah.
Definitely in this industry, this changes on a monthly basis, as of all industries. With cross collateralization, now that's basically just to educate customers as well. For example, we'll go back to the guarantor loan where it's very well known in the newlyweds or couples that have come together. They have a deposit, want to save up for the wedding. They use their parents' house for a guarantor. I did a guarantor loan for a friend, and parents actually own 2 properties, and I asked them, are these properties both cross collateralized? They're like, no, they're separate securities. They're both of the one lender, but they're not crossed. Now, what most customers don't know, that if you have 2 or 3 properties with the same lender, in most scenarios, after 4 to 5 years, those lenders will just start putting those properties together, which makes a little bit more sense in their hands, but customers are not so much aware of it. Now, going back to the equity, once you borrow that equity out of your home to purchase that second property, it automatically becomes those 2 houses are linked together, because you're essentially using equity out of one property as a future investment opportunity to purchase a new property at 100%. Because like you said, when you borrow equity, you still have to pay it back. You're taking that loan out. So those 2 properties now become cross collateralized.
To try and simplify what I just said, as I said, we'll do another episode on this.
It's a big topic.
It is a big topic, but essentially cross collateralization means if you have 2 properties or more than one property, and the loans are with the same bank, essentially. When you're looking to release equity at a further time period, at a further period in time, the bank will assess both properties
Correct.
together. So if one property's gone up $1 million,
Yep.
the other property's gone down $1 million,
Yep.
to
kind of balance itself out.
the banks will look at those 2 together.
Yeah.
As opposed to if they were uncrossed, and you wanted to
It's
put
a
out some
separate
equity.
security. Yeah.
They are separate. So if one property's gone up $1 million, and then the other property's gone down $100,000, they will not look at the property that's gone down $100,000. They'll only look at the property that's gone up. So they are separate. But that is a big topic, and we'll do another episode on that another time. I just thought we'd open the topic up.
And we promise to get the numbers right next time.
Yeah, we'll get the numbers right. We'll do a bit of research ahead. So if you got a little bit confused at that point, that's okay.
We are too.
We are. So is Fadi, and he does it every day. That's pretty awesome. We've gone a little bit over time, so we'll quickly summarize what we've spoken about today. Number 1, the importance and benefits of using a broker as opposed to going straight to the bank. So pretty much, we discussed it's a no-brainer. You go see them, they do all the work for you. It's for free. Go talk to them.
Free of charge. That's the important part. Yeah.
Important part for the brokers. That's it. Number 2, we discussed what exactly is a loan in property, how to get a loan. Very briefly, you mentioned the difference between an investment property, interest only, and principal and interest loans.
Yep.
We discussed deposits and the exceptions to the 20% rule.
Yep.
And then we spoke about LMI. Avoid it if you can, embrace it if you have to. Was kind of the takeout of that as well. We spoke about what equity is and how you can use it to push yourself forward in building a portfolio. And finally, we touched on cross collateralization and why you might want to avoid it. There you have it all. That's the 3rd episode of the First Brick Property Podcast. It has come to an end. I really enjoyed that. Did you enjoy that, Fadi? Would you come back on this podcast?
Absolutely, yeah.
Yeah, beautiful. We thank you for coming on a second time, trying to sort this out. I can see your voice has been picked up very well today.
Finally.
So, do you want to just do a quick plug to your business? Let the listeners know how they can contact you if they're interested in getting a loan.
Yep. So we're on all sorts of social media: LinkedIn, Facebook, Instagram. Just type in Power Loans into Google as well. We'd love to see new customers that don't think they're in a position to go for a loan. Those are the customers we want to see. We want to get you to your goals and targets, to your dreams, basically, of purchasing your first home or looking to widen your horizons. Get in contact with us. We'd love to see you. We'd love to educate you. And before, hopefully, you leave our offices, or when we come and see you guys are more confident, I guess. We're trying to put the power, our motto, Power Loans, putting the power in your hands.
That's nice. We'll have all of Fadi and Power Loans contact details in the show notes as well. So if you need to contact him, you can find it there. Before we end, I'd also like to offer a real quick special offer to our amazing listeners. February is the month of love, so we're gonna be loving, and we're gonna be giving out something really awesome right now. When you're doing research, a lot of the data points that we discussed in last week's episode could be hard to find, and a lot of the times you have to pay for these data subscriptions. So if you're on the hunt for a property and you've got and you found one that you're interested in, send us a message on our socials, and we'll get you a free property report. Just mention that you heard the offer on our podcast, and we'll be happy to help out. So that's a limited time offer for the month of February. So we think that's really cool. Just shoot it to us and we'll send you a free property report. A lot of our content you can find on Facebook, Instagram, LinkedIn. Just search First Brick Property Buyers and we'll pop up there. And we're also on TikTok, YouTube, and obviously podcasts. If you have any topics that you'd like to discuss on the podcast or have any questions, we plan to do some Q&A episodes in the future. So please send us messages on our socials or email us at hello@firstbrick.com.au. That's hello as in hi, HELLO at firstbrick.com.au.
Just a dough.
Yeah, I spelled hello wrong.
Hello.
Jeez.
Hello.
It should be the opening.
Hello.
Lionel Richie. If you've enjoyed this episode, please subscribe so you don't miss an episode. If you want to give us a rating, preferably a 5-star, please do. And if you can think of one friend or one person that this podcast will benefit, just let them know. Pass the pod movement.
Pass the pod movement.
So we're going to start a movement called Pass the Pod. So pass it on to a friend or family member that you think might enjoy this podcast. Buying property is our passion. Helping you do it is our mission. See you later.